Hello guys and welcome to Hackman Traders. In this video I'm going to be showing to you how to use the RSI for trading in the stock market. Now the RSI means relative strength index. It will it shows you how much the market is overbought and how much the market is oversold in in that particular stock. So to better understand this, we will demonstrate a chart and I've already plotted a chart and plotted the RSI on this chart. So the RSI shows you how much the market is overbought and how much the market is oversold. So when to buy in these in the stock market by demonstrating the RSI. Now whenever you are making your investment or trading in the stock market, you always use the different indicators to help you analyze different results. One might show you that it's not bearish, but to show you that it will become bullish in this particular area. So now to better understand the RSI, there are two levels in the RSI. One is this oversold area and the other is overbought area. The oversold is 30 level, 30 level, yes, and the overbought is 70 level. Now when the stocks crosses this overbought area, the 70 level, it means that this stock is overbought. The buyers have bought it so heavily that there is an indication that the stock might pull down might be pushed down from this level. And whenever the stock is crosses this 30 level or near this 30 level, it means from this level there is an indication that the stock might go up, as this stock has been oversold sold many times in its trading in the trading days. So one oversold area was this one. Again the market rose. The other was this one at this level. The market rose again from this and crossed this level. Is thrice in this chart. In this chart, the market has crossed its overbought area, and twice it has crossed its oversold areas. Now besides these, you can also have your own. You can adjust these levels as well, the 70 level and the 30 level. The 70 level you can adjust it to up 65, and the 30 level up to 35. It depends upon you. And beside these adjustments, you can also use these as your indications as well. Now this is the oversold area and this is the overbought area. You can plot these. Now to trade these, always look at the chart and the RSI as well. Let me show it to you clearly. Now this is the oversold area, okay, and now this the stock starts to rise, but then again it starts to fall. Now as you can see at these levels, the stocks rise but the fluctuation of the prices wasn't that much. So the RSI rose, and it shows that the market has a greater potential of moving in the upward direction, but with lower prices. Now this happened due to this also is the same philosophy. The market rose but with lower prices. It has a greater uptrend potential, but with lower prices change. This happens over here whenever sometimes this happens that the market rises but the prices are higher, but the potential is lower. As in this case, the market rose but the potential was low. Now in this case both of them happened. The market rose, the potential was rise. It has a greater uptrend potential and much higher price change. Now from that onward, the prices starts to drop. Now whenever you are trading an RSI, always master this psychology, or the candlestick psychologies, what the investors are doing, what is their activity in these areas. Always remember these. Master these. Master don't remember. Master this candlestick psychologies. What the investor has on their minds at these levels, whether the investors are interested in pushing the market upward or downward. Now in this case, the market dropped at these levels, but the market again rose. But this time the RSI rose, but that rise was not that like the previous one. but again the market dropped a correction, no sorry, a pullback, and again it rises. But this time the rise, it reached to the highest level, but the rise was not like that of the previous rises. It hasn't crossed the 7, or it may have crossed the sorry, it may have crossed the 70, the overbought level. But this time this market didn't have a greater uptrend potential, so the prices rose, the prices do rises, but the market potential wasn't that much. It shows you how what is the investor sentiment, like how much the investors are interested in pushing the market upward or pushing the market downward, pushing the market in an uptrend or pushing the market in a downtrend. It shows the potential of the direction of the market, whether the market has that potential to move in the to move upward, or whether the market has the potential to move downward. The RSI generally shows that, and with the prices fluctuation, you will have to compare the prices as well. If the market, let's say if the market is moving with the RSI has the potential of moving in the upward direction, but the prices are lower, then this means that the market will move to a higher highs, but the prices will be smaller, and the prices will drop. Now, as you can see in many of these areas, you can see the price change. The price starts to drop. Smaller change, no, moved upward, but the buyers were strong at these levels, so they pushed the market downwards. Again, the same happened. Greater uptrend potential. Again, the market pushed downward. The same happened in these levels. Now again the market is showing uptrend potential, because you can see that the market has this potential to move upward, but with lower prices. So it means that the market will move, but the investors are not raising their prices, not willing to pay more for the stock, because they think that this stock is not worth more than this price. So they are bidding lower and moving the market in the uptrend with lower prices. The same happens with the downtrend. They might be moving the market in a downward direction, but with lower prices. It precisely shows that thing, that how that the market has potential, but the buyers are not willing to pay higher prices for this particular stock. It generally shows that. But you will have to indicate how much the buyers are interested for paying the prices. Now in this case, the lowest price was 47.50, and the highest was 48.75. So the buyers were willing to pay up to 48.75, no more than that, because they think this is the total worth of this stock and no more. And the sellers were unwilling to push the market downward, because they think that 47.5 is the lowest, is the great deal. So they want to keep the prices up from this. The sellers think that the market is not worth than the 48.75, so they keep the prices lower, and the buyers think that the market is worth more than that, so they push the market up from 47.5. So this is the psychology of the traders here. And also the market has a potential of this here, because there is a bullish candlestick, so it means that the market would move upward for a while, or maybe it may trade in a side trend. There also shows a support level as well, and a resistance level. So we will have to wait for it to show us. Always patience is the key in trading in the stock, so you will have to wait for it to show you positive results while trading in the stock market. And that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.